Hi, I'm Dan Danford. We're doing a series of podcasts for DadsDivorce.com where viewers of the site submit questions and then I do my best to answer them. Today's question comes from a viewer and we picked it up just last week. With the Bush-era tax cuts coming to an end, what can I do to brace and secure myself for higher taxes? Well, hold that thought. The Obama administration has now decided that they think they want to extend those tax cuts into the future. You remember that that was a key point of the presidential campaign, was that President Obama and many of his Democratic supporters felt that those tax cuts were too severe and that we should increase taxes so that the government could provide the programs and things that were necessary. However, because of the severe recession and all that goes along with that, they've now decided that they want to extend those tax cuts into the future. So your question may not be all that important after all. On the other hand, what they tell us is they'd like to extend the tax cuts for everybody, every family making less than $250,000. Now, $250,000 is a lot of money, and I'm sure that for many of us that sounds like rich people. I can also tell you that many people making $250,000 a year don't think they're rich at all. So it's interesting how we have different perceptions of the same thing. Now, forget the Bush-era tax cuts just in general. We aren't going to talk about those anymore, but I do want to touch on something else. There are many very smart people from both parties who believe that we will see higher taxes in the future. Essentially, when you have as much government spending as we've had in the last couple of years because of the stimulus and the recession, eventually we have to pay those bills. And so they believe that there will be higher taxes. So kind of some general advice about how to solve that issue. First of all, the main thing that most financial planners recommend is that you defer taxable income as much as possible. For most of us, the simplest and easiest way to do that is to use the 401k plans, or if your teacher work in a hospital, 403b plans, or any other tax-sheltered vehicles that are allowed to you. And why that works so well is you take money that you would have gotten in taxable income and you funnel it directly into one of these accounts where it grows tax-free until retirement. It's a great way to defer money that you'd be paying taxes on anyway. So that's the first step that most of us talk about. The second step is that there are a couple of tax-saving devices that many people use pretty routinely. One of those would be to kind of double up charitable contributions. Especially when we get to this time of the year and people start looking at their holiday giving and things like that. One of the things that some people do is they give 2 years of contributions in a single year. That way they get more tax bang from it in the year that they do that. So just, your situation may be different from everybody else's, but when you get ready to, make a pledge to the church or the United Way or whoever, instead of thinking about I'm going to make contributions in, October, November, December, January, February, March, maybe you ought to make all 6 months of donations right in December. And what a lot of people do is if they make an annual contribution to their church, say $1,000 a year, well, they might do $2,000 this year, then skip next year, and then do $2,000 the year before. By the same token, when your boss comes to you at the end of this year, and I sure hope he does, or she does, they come to you and say, you've earned a bonus this year, and we're going to write you a check for $5,000 or $10,000. You can probably decide that you'd rather take that check next January instead of this December. Now, and most bosses would probably be fairly understanding about that. Now, the issue for you is which year is the better year for you to take the taxes in. And I'm not looking at your tax return, I can't tell you. But what I can tell you is if you have some flexibility, it may make sense to defer that bonus into next taxable year. So that's just something to look at. And then in sort of a half-hearted manner, what many of us tell our clients when they come in and complain about taxes, we have the simple answer, which is, well, quit making so much money. The truth of the matter is, as much as most of us dislike taxes, the reason we pay more tax is because we're making more money. And so it's kind of a double-edged sword. I mean, the good news is, hey, you made more money this year than you did last year. The bad news is that means you have to pay more taxes. So whether or not 2010 ends up being, or 2011 ends up being a high tax year or a low tax year, we really don't know yet because that stuff hasn't made it through Congress. What I will tell you is that there are some simple things you can do that will help you reduce your tax load this year and allow you maybe to put it off till next year if that's the smart thing to do. It's real easy to sit down with your CPA or accountant or tax person in the month of December and kind of look ahead and make some decisions about the smartest way to handle your taxes. Let me know if there's anything else I can do. Forward your questions to us on DadsDivorce.com. That's another podcast for this week. Thanks. I'm Dan Danford.